Good afternoon, good morning, everybody from around the globe. This is Michael with backtothefuturetrading.com. And I'm going over, there's a chart that's been particularly accurate, I guess, predictive, and it's outside of the normal scope of reliability. Normally, we're seeing signals in sort of a 60 to 70, mid 70s max capacity of expectancy. But this chart is it's freakishly predictive in that everywhere you see a signal dot on this chart for the pound dollar, the sterling dollar, was a date that we were waiting for weeks into the future. This is a daily chart, so it's at the outer ranges of the software's ability to predict when moves are likely to occur in the future. And you can see here that we're at the present day right now. Today is December 23rd, and that is the next prediction date, Monday, December 23rd. We're on that date right now. The ones out in the future are January 9th, the 12th, the 18th, and the 21st, out on the right-hand side of the chart. And so the things that I want to talk to you about, number one, are kind of getting those dates out into the public consciousness, just to let you know to watch for those. But two, there's sort of a narrative that's transpiring here, and the narrative is revealed in the price action at the times of these moves. That is to say, yes, there's been a trend reversal. We're sort of up near the highs of these clusters here, but there's a few things that I'm watching in particular. First, let's go back and take a look at the bottom over here in this chart. Historically, when you see a buying pressure time, you'll notice that there's been some resistance, some consolidation, right? And right here in August, we had this plunge candle with this huge wick right here. And this, we end up finishing the move higher than we started. So you sort of see this finish between the 29th and the 5th of September. This finishing move right here is sort of drawing people into weakness. It's the first place that we see this evidence of people were looking to sell the market between the 29th and the 5th, and they were watching specifically for a breakout of this low. And historically, over, 10.5 years of watching these signals, you see stop runs near these signals. You see stop runs near these signals. There's another example over here. We have a prior swing high, and then right before the 23rd of September, you have 1, 2, 3 punctures of that high, luring people into a purchase scenario to create liquidity right before the selling move. The 10th of October gets us above the 120 period EMA. There's nothing magical or special about it. But one of the things that I want you to key in on this chart is the luring of retail traders and money that sort of isn't in the know into stop reversals. And in particular, I want to focus on what happened here and what's happening up top in the pound right now. We sort of see that same duplicity taking place as people are sort of lured into that high, all right, selling near the high. We're in a really neat place right now in terms of time, because we can look at this and actually do a exertion analysis. So when we look at the prior signals from the high of this selling pressure window to its low, before it gets to the next white dot, we have a block. Okay, we'll do the same thing over here. From the high of the 21st to the low, before it got to the next white selling pressure historical time, we have a block approximately that big. Okay, over here on the 18th, we have a high and then a low of that big before it gets to the next white dot. And if we kind of copy paste that back one generation, you sort of see that this size window is relatively consistent with regards to how much of the down move is occurring inside of these windows of time. So here I'm not adjusting the height, just the width, and you'll see there's a fairly consistent bite off chunk of the market that goes down at these times. And again, I'm not going to adjust the height, I'm just going to adjust the width over here. And that's been happening fairly consistently now since August. The last time things started really getting bigger than that, when the moves were larger than that, were in July. So in July you had a much larger push down than this range of motion. So right here you can see it's doubled, almost 250% of that move. So one of the things that I would sort of encourage people to look at now is we're coming into today. We're almost near the bottom of that range. So the range, just so we can get a number associated with it, somewhere on the order of 150 pips. And so we're kind of looking at a range now of 150 pips, but if we break through that threshold, right, if we kind of break through that area right here, we're potentially seeing the first signs of another cascade, another down move. One of the other things that's really important to notice here as well is the width of the available time. The width of the available time. There's quite a few days here now between the 22nd and the 9th of Thursday. You sort of have these 2 weeks of potential price movements coming out of the new year. So what makes me really look twice at this is that we lured a lot of people into this sort of evening star pattern right here, this bearish engulfing near doji reversal at the high. And so this to me represents a loading up, tricking people into believing that this thing was recovering. We're going past 3,500, the sky's the limit. And so all of these people that were long up here, that were buying into this move, were now coming into a really critical area right here. And so I would look to be a seller below this threshold area and watch for opportunities to buy as we kind of pull up into perhaps false head fakes and continue to see sort of this movement down if this narrative is going to play out. But the dates to look forward to in the future, again, these dates we all had an awareness of. If you're in my webinars each week, you know that we're calling these dates out and talking about them proactively. We're looking at the 9th, the 12th, the 18th, and the 21st for the pound going forward. My name is Mike Leidick, and if you have any questions, feel free to leave a comment below. Otherwise, we'll see you in our weekly webinar. Keep an eye on this, and we'll see if these moves play out the way our software is designed to.